So one of the most famous investors of all time is Warren Buffett. And I think he made a famous bet years ago to the effect that somebody could say that he would invest in the S&P 500 and then somebody else could invest in some hedge funds and you'd see after 10 years who did better. And I think the people that invested in the S&P 500 did better than the hedge funds. What do you think of that view that you can't really beat the market and people like you are trying to beat the market, but it's really difficult to do that?
I think it's a wrong way to sort of frame what we're trying to do. So first of all, there are certainly firms that have had fantastic track records over time. Renaissance being the obvious example, but others as well that have significantly beaten the market. But I don't think that's the right way to look at it. I think they're both good investments for different purposes. So if you had an unlimited time horizon and no need for liquidity, and you could just lock up your money for 50 years, sure, you should just put all your money in the S&P and you'll probably come out ahead, right? But that's not reality for most institutions and most families. You have different purposes for different types of investments. And so having a piece of the portfolio that's market neutral, that's going to do well regardless of the direction of the market, that's lower volatility, that creates like a ballast around which you can take higher risk bets, I think adds a lot of value for most institutions.